Hey everybody. So go ahead and jump into this so everybody can, enjoy the rest of their evening. So it's a couple things. I dropped in the group chat earlier today that I was starting to see some cracks in the economic fibers of things that are going on right now. So I'm gonna try to incorporate that into things that I see on the Forex Factory calendar, but then I'll also expand a little bit on that towards the end, because I want you guys to understand how I think whenever I'm looking at some of these news items. So, all right, here's the Forex Factory calendar. So today we got some, the biggest thing that I was looking at today was housing. Housing was the industry, housing is the sector that I'm looking at. Financials, that's also an area that I'm looking at. So today kind of dealt with a lot of those things. We had housing news from Canada, even though it's not the United States, it's still housing, still important. That news was slightly off. And then we had tons of speeches today. A lot of those speeches just backed up and corroborated a lot of the major chair speeches that we had gotten, whether it's from the US or from GBP. So those speeches, they're worth reading just so that you get the point of view of that regional Fed chair, but it's not essential that you just have to go back and look at those because it's not a major one. And then tonight we are looking forward to the Australian monetary policy minutes. So just again, going back, trying to figure out what their monetary policy stance is going to be. So for those of you who've been on Zoom calls with me before, I've told you guys about some of the correlations between countries and metals and that sort of thing. So Australia is one of the leading producers and exporters of gold. Gold production right now is down, which means that their mines aren't in 100% capacity. So one of the major things that I'm going to be looking for in this speech is to see where they plan to go with gold. Like, what do they plan to do as far as price inflation? Because they can essentially control that market right there within their own economy. So I want to see how much they're going to talk about global inflation as well as their own inflation and jobs for Australia. Tomorrow, I'm looking forward to listening to the Bank of England governor and then also the Swiss bank chair as well. So these are two very influential people. I'm looking forward to listening to their speeches because one of the major headlines and one of the major things now is who's going to be the first country of all of those who have blocked American tourism. Who's going to be the very first one to say, yes, we're going to let Americans back in. We're going to invite Americans back in, and we want to essentially stimulate our economy. So who's going to be the first to do it? How do they plan to do it? And what are going to be the requirements? There are a lot of countries already that have stated that they're allowing Americans in, but it's a lot of stipulations. Like you either have to have had the vaccine or plan to get it when you get there. Otherwise, you have to quarantine, and they make you quarantine for 14 days. And for a lot of people, if your vacation is only a week, you're going to have to literally stay in whatever area they tell you to stay in. You can't use your Airbnb. You can't use your, VRBO. You have to stay where they tell you to stay, and you can't leave. So for a lot of people, it's not even worth it to take that trip. So I want to hear that coming from GBP and from the Swiss franc. I want to hear what they're talking about as far as tourism is concerned. On Wednesday, we get consumer price index news, economic stability news. We also get CPI news from Canada, oil inventories, we get Fed minutes, and we get a Fed speech from one of our regional Fed presidents. Then we get Australian employment news. So all of this is going to be important. CPI. CPI wise, we got the CPI news for the US last week. So tying that news into CPI news for this week, we're just going to be looking overall across the globe to see inflation, how much inflation has grown, not only in the US, but in all these different countries around the world. And a lot of these countries are countries where we do get items from. So their inflation means our inflation. Because if their inflation is up and they still have to sell that product, they're going to sell that product at an increased price so that they can make a profit. Then once it gets here, it has to be marked up again so that whoever received the product makes a profit. So the consumer is always going to be the one footing the bill for any type of inflation. So just remember that whenever we're looking at these inflation numbers, that inflation is your inflation. That's what you have to pay in excess just to get that item. Crude oil inventories, we know why crude oil inventories are important. We look at it every week, seeing as how we just came off of a week where we had to use supplies. I'm assuming that we are going to have a deficit because we use supplies. They've already kind of taken that into consideration. The reason why I love how, we record these Zoom calls is because, we might not be looking at the Forex Factory calendar every day. On the Zoom call, we look at it every other day. So you can actually go back through on the Friday that I cover the next week and then look at it throughout the week and watch how they change these forecasts. That's a way that they can manipulate the market. So when I'm looking at crude oil inventories in this middle number, I'm looking at how it's going to change between now and when that number actually comes out on Wednesday. And typically it does change at least 2 or 3 times between now and then. So we'll be paying attention to that. So the Fed minutes is where I can start tying in the housing market. So it's just I could do a whole lesson on solely why we ended up in the crisis of 2008. Not going to do that. What I'm going to say to you now is a lot of the reasons why we ended up in the situation in 2008 are starting to reappear again. I can speak to this specifically for the housing market because out of all the markets that are inflated, housing doesn't necessarily mean a physical residential home. Housing is just wherever people can live. So that could be a single residential family home. It could be a townhouse. It could be an apartment, like housing. The housing market is super inflated. We look at every first Friday, how much money or how the average hourly spending has changed. Notice this year, average hourly earnings has not changed that much. We did see a bump on the last one, but it wasn't a lot whenever you take into consideration all of the, when you take into consideration all of the average hourly earnings that we've looked at over the past year. It's gone nowhere. People still are making about the same amount of money as they were pre-COVID, during COVID, and now you can kind of sort of say post-COVID. So if people are making the same amount of money, but inflation is going up, meaning you're paying more for everyday items, that's a problem because now think of your paycheck as a rubber band. You have to stretch that paycheck further and further to get to the same place. Like at the end of the day, you know what essentials you need to have. You know that housing, you know that a roof over your head is something that you need. For people who rent, your rent could be going up every year, every time you renew your lease. For people who have mortgages, that price fluctuates on the back end. It's not something that you see, but every time the Fed changes an interest rate, every time you see, oh, okay, they're building houses in my area now. every time you see that, the price of your property fluctuates as well. So what I'm looking at right now is the fact that the housing market is super, super, super inflated. It's really inflated. And I'm looking at how much realtors are actually selling. I'm looking at what the banks are lending. And then I'm looking at what the construction companies are actually trying to put out there. The construction companies really want to build, but the banks are now getting to um, a plateau where they aren't quite lending out as much as they used to, and they're really starting to become more strict with lending rules. And with the rate of inflation that we have going on right now, we can't continue this same pace for much longer. I'd say we have like an 8 months maybe on the rate of inflation that we have going now, before the Fed changes interest rates again. I know the Fed promised that they wouldn't change interest rates until 2023, but when you look at how fast the economy is growing to them is the inflation. When you look at how fast inflation is growing, it's not sustainable. And if they do choose to wait until 2023, we're going to have serious problems in our economy. It's almost like waiting until the last minute and then changing interest rates and then putting people in a panic. Because right now, the housing market is, if you have a house to sell, oh, you're great. If you're trying to buy a house, like you're competing with anywhere from one to maybe 2 or 3 dozen other people over a house. So right now it's a seller's market. When that flips, whenever the interest rates start going up again, whenever the Fed says, okay, we're about to flip this, selling houses is going to slow down. It's going to slow down. Then you're going to start seeing rental prices increase. So you're going to start getting it on the back end of people having to pay more for their rent. That was some of the stuff that started happening in 2006, and that led to a lot of banking issues. It led to a lot of issues with people with their housing, especially the people who have the adjustable rate mortgages. Those are the people who you have to worry about. The people with the adjustable rate mortgages, when the Fed says we're going to change interest rates, they're the first ones that's going to be impacted. So it's going to be the people who have like the 10 and 15-year adjustable rate mortgages that we're going to be looking at. There is a way you can look at that, because remember, the Fed ties all that kind of stuff up into mortgage-backed security. So you can see all of it now. It's almost like a public ledger. So those cracks that are in the financial system, the billions of dollars that the Fed has to keep giving to the banks every month. The New York Fed gets money every night, believe it or not. So the money that they're printing to give to these banks is not sustainable over time. And that's just leading to more and more inflation. And, I just told you where that was going to go. All right. So with that being said, we'll be looking at unemployment claims, because people need jobs to make money, to pay for these houses and their expenses, and just to spend money, period, to keep the economy going. So that's going to be the big thing on top of the Fed, the Philly Fed manufacturing news. Definitely be paying attention to both of those. And then we have 2 speeches. Australian retail sales are on Thursday. And then Friday is one of those Fridays where we get all of the flash and manufacturing news from Europe. We do get a little bit of news from Canada, and then we get flash manufacturing news for the United States. So what I will say in all of this is be out of the market before the end of the week. There's no reason at this point that anybody should be in the market after Wednesday. If you're still in demo, if you're still practicing, if you're still trying to find your, unique way of trading based on your schedule, whatever the case may be, okay, but don't do it with live money after Wednesday. Like paper trade the second half of the week and, get a nice strategy going. Because Friday is one of those days where we're going to be getting a lot of news during London session. And unless you're a night owl or unless you're just going to be up during that period of time, it's not worth it. And the news is coming out too frequently. So this news comes out every 15 minutes to 30 minutes. And whenever this news starts coming out, it whiplashes all over the place because the French news might be great, German news might be bad, overall Euro news might be great, and then turn around and GBP news might be horrible, but it might be something linked to the Euro as to why the GBP news is bad, and it could just flip both markets. So don't do it. Don't do it to yourself. And then same thing for whenever this news comes out for the United States and for Canada, it's right around the same time that New York session opens. Don't do it to yourself because that's already a volatile time anyway, because that's when markets open. So just sit back and watch it. That's why it's important to know when sessions open and close, just so that you don't get stuck in trades or stuck trying to do something when a session is going to be opening or when news is going to come out. So that's that for the Forex Factory calendar. I told you guys over on Friday just to keep a watch on cryptos over the weekend. Tweety McTweak Fingers decided to cooperate, or I feel like at this point it's just manipulation. It's manipulation of a market that, you know, typically can't be manipulated. But anyway, you cause mass panic and hysteria amongst the people and you can move a market. So, you know, if you've watched cryptos over the weekend, you see where they are. You know the motto, but you know what your account looks like, you know what you're able to do. So that's all I'm going to say about that. And then just to piggyback off of news that I gave you guys about US troops being overseas. So one thing that's super important about something that I told you guys even before that was when we were looking at the stimulus packages and I showed you how much aid money was going out and who we were giving aid money to. We just gave almost like $800 million to Israel for weapons. And, you know, we're expecting to not be in the midst of this issue that they're having with, you know, the Palestinians. And I want you guys to keep those things in mind, kind of remember some of the things that I was telling you guys at the beginning of the year with correlations. So, you know, anytime we start talking about weapons, wars, metals, any troops on the ground, all that kind of stuff, remember those companies that I told you, especially for the stock people, remember those companies that I told you who that benefits. That's not only going to benefit them right in this present moment, but it's going to benefit them out to earnings through the end of the quarter. So remember those things because it all comes back full circle. And that's it. I'm gonna go ahead and turn it over to Mr. Levels so that he can get started with the technicals for the week. And if you guys have any questions, you can drop them in the group chat or wait till the end of the call.
Cool beans. Appreciate that, Corman. Great information as always. Hope y'all was taking note. Go ahead and jump into these technicals. There we go. Cool beans. All right, let's look at it. So, looking at the dollar for this week, we see that we got our downward move off of the imbalance that I was looking for. Cool beans. Um, to start the week out, I want to see if we hold this level that price is currently at. And if we do hold this level, then I do expect to see the dollar continue to push to the upside. So I will be paying attention to time and price for London Open. And I will be looking to see if we get bullish momentum during London Open. And if we do get bullish momentum during London Open, I would like to see New York give us some bullish momentum as well to get us back above this structure here that this imbalance created. And then once we get above this structure, I of course want to see price hold that structure and then continue to push to the upside to come and clear out this pool of liquidity right here. So with that being said, let's look at our currency pairs, starting with Euro USD. I want to see Euro USD continue to be bullish. Just to take out these highs here, and if the dollar does play out the way I want it to, then I expect to see Euro USD just reach up, take out these highs here, and then swing to the downside to potentially come back down and fill in this imbalance that we have to the downside. Moving on to GBP USD, same thing. I would like to see GBP USD go ahead and push on up, come back up here, take out these highs here. And then if the dollar gives us our upward move, then I would want to see GBP USD go ahead and push on down to potentially come down and fill in this imbalance that we have here. NZD USD. Yeah, I would like to see NZD USD go ahead and give us some little bullish momentum to the upside. Could see here. So sort of a scenario like that. I just want to see some bullish momentum throughout the rest of tonight, and maybe London markets start to open up bearish to give us this downward move that we need to see this level down here retested. And we could potentially see price come all the way down to fill in this imbalance that we have here. So that's what we're going to be looking for out of our currency pairs for this week. Let's check out our metals. Yeah. So we'll probably continue to see our metals. This is silver. We'll probably continue to see silver be bullish throughout tonight. And then we'll be looking for some bearish momentum around London Open and going on into New York. Same thing with gold. Continue to see gold push up throughout the rest of the night and start to see some bearish momentum for London and going into New York. Oil, I want to see oil give us some bullish momentum. Keep in mind that oil do correlate with the dollar, meaning that it moves in the same direction that the dollar moves in. So we are expecting to see bullish momentum out of the dollar this week. So we would be expecting to see bullish momentum out of oil as well. And last but not least, U30. I want to see U30 reach up in here, going into London. And then start to give us some bearish momentum for London and going into New York. I want to see this structure right here retested tomorrow for London. I mean, for New York session. For New York session. So I would like to see this structure revisited during tomorrow's session for New York. So let's see how that work out for us. Yeah, I like that. So that's what I want to see out of the markets to start the week, and we'll see how the analysis play out for the week. With that being said, I'm gonna start the recording and take any questions.